And we will move to the next presenter. Next presentation, the title called A Review of Geometric Brownian Motion for Forecasting the Daily Share Prices in CSA. This is quite a good if you are interested in stock market. Now share market is little moving nowadays. If you are interested and listen to this presentation, you can be a rich, right? If you want to, I think everybody want to be a rich, please listen this presentation. This is quite a good. The presenter, Mr. Mrs. Nagahawaththa. This is over to you.
My presentation is based on a review on geometric Brownian motion for forecasting the daily price increases in CSC. I'm S.C Nagahawaththa. This is an overview of my presentation. First, I'll give you an introduction, then we'll come to the research objectives, research methodology, data analysis, and finally we'll conclude my presentation with a discussion. Stock market investments have become one of the most easiest, popular, and fastest way for building healthy financial foundation. So, as stock markets facilitate this purpose, it has become more institutionalized. Among companies, there is a trend in listing in stock markets, especially they do so to increase their capital needs for different purposes such as restructuring or business expansion, etc. And we can identify that many macro and micro economic factors directly affecting the prices and volume of stocks. When we talk about the behavior of stock market prices, we can observe high volatility and instability pattern in stock prices, and these things can happen within a very short period of time. Basically, when the company is running well, the prices of stocks in that company will go up, or else if the company is doing not well, then the prices of the stocks will go down. And if an investor sell his stock with a profit, we can say that he is going to earn a positive return, whereas if he sell it with a loss, we are telling it he is selling at a negative return, or he will get negative return. So therefore, data analyzing and forecasting in the financial sector has become one of the biggest challenges in modern economy. So our research is based on Colombo Stock Exchange. It is one of the most modernized stock exchange in South Asia with fully automated trading platform, and it has been one of the best performing stock exchange in the world, with market capitalization over US dollars 23 billion and average daily turnover rising over US dollars 18 billion. Especially the political stability of the country has become one of the most influential factors to increase both local and foreign investments in CSC. So basically, the CSC uses two price indices. They are all share price index and S&P SL 20 index. So in ASPI, they calculate it using the price fluctuations of all listed companies, whereas S&P SL 20 computed by using the stock prices of the best 20 performing companies. So we have identified the high volatility and the instability patterns of stock prices as the main problem in CSC. So for these innumerable micro and macro economic conditions such as annual GDP, management changes, international and local political changes, oil price and interest rates, etc. are directly affecting. So here I come to the research objective. So our research objective was to develop a suitable forecasting pattern to predict the behaviors of the stock price we have used annual reports, background reading, interviews to capture the data, and especially we have used Colombo stock market and annual reports of central bank as the secondary data to get the data. And we have collected or we have gone through 240 daily trading data from January 2013 to December 2013. And the models we have used in our study was ARIMA and Geometric Brownian motion, the data analysis. So this data analysis was done basically using three phases. In the first phase, we have used ARIMA model to forecast the stock price indices. In the second phase, we have used the GBM model to forecast the stock price indices. In the third phase, we have compared this ARIMA model and the GBM model to find what is the best suitable method or the model to forecast price indices. So the first phase, we have used the ARIMA model to identify the price indices, forecast the price indices. So, as the initial step, in the first phase, we have used unit root test to check the stationary of the data. So, as you can see here, the p-value is less than 0.05 at the first difference. So, therefore, we can say that our data is stationary in the first difference. And we have checked the series of the stationary series by using AR and MA terms. So therefore we have used information criteria such as AIC, SBIC, and we have found that based on this minimum values of information criteria and the significance of parameters, we have find that ARIMA 312 is a good model to forecast ASPI, and ARIMA 11 model is good to forecast S&P SL20. So in the second phase, we have used GBM model to forecast the price indices. So as you can see here, we can see Brownian motions in ASPI. So therefore, we have used geometric Brownian motion in our study as it has become, and now it has become a trend or most commonly used model in finance. So this is this first equation we have used to the daily closing price values to this equation was used to convert daily closing price values into daily returns, and in the and then we calculate the mean and the standard deviation. And we have assumed that our data set is normally distributed, hence we can show the return using this equation too. And finally, we have developed the last equation to forecast the price index. So in the third phase, what we have done is we compared the GBM model and the SPI model using the MAD and MAPE testing accuracy techniques. So here you can see, based on these results, that MAPE and MAD are highly accurate, gives in ASPI and S&P SL20, both GBM, when comparing GBM and ARIMA, the GBM gives the highest accuracy. And if I further explain it to you with this graph, you can see these actual values are very similar to the GBM values. But the ARIMA is having some variation with the actual values. So therefore, we can conclude that our proposed model or the GBM model is one of the most, is very suitable in predicting future price indices when there is high volatility fluctuations. So that is our presentation. That's the end of my